clearly it's a surprise, as you've been talking about all morning, and I think that's what we're seeing. I think from the point of view of investing, what people have to do is they have to say, okay, let the dust settle. What's going to happen over the next year, next 2 years? And I think that's how you start positioning portfolios. And so you say, what are people not talking about? What never came up in the discussion? Because if you're looking for the black swan, if you're looking for the investment opportunity, that's what you have to look for. What's the main issue? Inflation. That's the big issue. Inflation expectations in the United States are already troughed. They troughed 9 months ago. We're now talking about trade barriers. We're talking about restricting the flow of labor. These are inflationary issues. So, you know, the headline inflation rate's 1.5% right now. I think people have been spoiled by that. If you look at the retail stocks and what's been happening to the retail stocks, they tell you that something's going to happen here to consumption. So I think if you want the opportunity, it's on the inflation side. If you want to be cautious, it's on the consumption side.
Yeah. Mohamed, where do you stand?
So it's important that Mr. Trump came out in a very gracious manner. And that's why the markets came back from being limit down 5% to something much less worrisome. A lot will depend, Melissa, on three things. One, what he says he's going to do. If he focuses on corporate tax reform, on infrastructure, on deregulation, the markets would like that. Second, what he refrains from doing, which is protectionism. The markets will not respond well from protectionism. And finally, he's got to come across like he did at 2:30 this morning as a unifier now that the election is behind us. So see, if he does these three things, then we can stabilize and this will be a good entry point. If not, then there's still downside to this market.
You know, Jim, I don't know where you stood in terms of where you saw the S&P 500 going with the Trump victory. Bank of America put out a note this morning essentially sticking to its target of, I think it was 2,000 on the S&P 500 and saying that the risk is to the downside. They also point out that in response to most macro events, markets go down 6%. Given the reaction we've seen so far, I know it's early days, early hours, where do you think we go on this event?
Well, you know, I think it's important for investors. Today, we're all, with this unexpected event, everyone's excited about all the change that could happen. But I think the reality is the change is going to be far less and far slower than what we all think it could be at the moment. Technically, we have a tri-power for the Republicans. But the reality is, I think, we have an independent in the White House and Republican control of Congress. I think that's going to slow that change process down quite a bit. And what that will mean is that what will really dominate the next year for the markets, I think, is going to be economic growth and earnings. And those things are looking better. Earnings momentum's positive and rising. Economic growth in the United States has turned up again. If you look abroad, you're seeing China and other parts of the world doing better. You now have brought values down a little bit. You've created a little short-term pessimism. I think that's really good for the stock market looking out over the next year. I guess I would say one last thing. I remember a week or two ago, Steve Leisman had a survey of Wall Street strategists and analysts, whatever, and they said that Trump was the best for the economy, but Clinton the best for the stock market. And I always thought that was odd, because in longer term, if Trump is the best for the economy, he's also going to be the best for the stock market. And there's no doubt in my mind, if the economy turns out okay, then I think stocks will do okay too. Maybe not in the real short term, but over time. I would take any weakness, Melissa, as a buying opportunity here and adding to risk on as if people are going to panic and go risk off.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.